So thank you. So today I'm teaching you how to develop your profitable trading system. So before you even start, you have to sit down and think about some of the key aspects of your trading systems. What is involved, what it takes. So this is not a technical course or something, that you say, okay, I saw some settings on the chart and then I just go and implement this indicator and I start making money. So that's not what it is. It's giving you the overall, the bigger picture. Just now I had two friends a long time ago. I met them and I met them again today. They invited me for the lunch, and every question they asked from the trading point of view was, I mean, all kinds of questions, and they were all, I could tell that they were just not the right, their thinking was not right. So they were telling me they've been trading for last 30 years, trade marijuana stocks, they lost money. Then they traded blockchain stocks, they lost money. Now they are chasing AI stocks. So they were asking me, um, so tell me which AI stock I should buy, or what about the financial stocks? Do you think Bank of America is good? Or what do you think about AT&T? It pays good dividend. So should I buy AT&T and store it? Or I said, unless you plan to give it to your grandkids, you buy AT&T and just invest it for dividend. So there were so many. Now, in this today's topic, I will explain to you what you should be doing in order to be profitable. So think about all this. Pay attention, and I learn it and I'm still learning it. So I learned from the masters. So there are a lot of masters out there. And what you do is you pick up a few things from this person, few things from this person, and then you put two plus two together. So that's what you have to do. So somebody will teach you something, somebody will teach you something. There's always something somebody is teaching. Even my 5-year-old son, um, I can learn something from him. So the slide in front of you, it says 3 contributing factors of trading success. So 3 contributing factors, and I will explain to you how you can put 2 plus 2 together, how all of this fit. So you can laser focus with the concentration. So when you laser focus with all your concentration, you will be able to succeed. So and you will be relaxed. You will be um, kind of not in a hurry. You're not panicking. That's what it is. So if you put everything together, so um, recognize the most important factor is you. So in my trading, the most important factor is me. So I give you example. Today, my one of my friends said, "So you hold the position for 7 days, 8 days, 3 days, or 30 days." So as long as it takes, you need to hold when the target hits, and it depends on your trading horizon. So you cannot just say, okay, I hold the position for 3 days, and on the fourth day, I will sell my position because 3 days have passed, ring, 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 I need to sell. So no, not like that. What if on the fourth day, it's moving, and the 3 day it was dead? So you see how the thinking is. On the third day, 3 days, it is died, and on the fourth day, it woke up and then it starts to rise. So are you going to sell on the fourth day? So so think about the beliefs we bring in the market. So this is just one belief I'm mentioning to you, and I'll show you some checklists of the belief the trader brings and how we all trade. And same thing, same symbol, and traders trading differently. That's why we have a market. Now, so we trade our beliefs. So this is we live our life based on our beliefs. People go and kill each other. People even kill if their team lose a game, and then they go and kill the other fans. They just go and kill them because their team lost, so they go and kill. So think about it. People are willing to die for all sorts of things. So same way, we bring our beliefs in the market. So we are trading our beliefs. So I will give you some list of the beliefs. So this topic is so big. I have my own class, and it's just on this topic. Belief is about 130 slides. So 130 slides on just on beliefs and trading. So it's a separate topic. So beliefs. So we bring our beliefs. Then, based on our beliefs, we adopt a mental state. So we bring our beliefs. Then we, based on the beliefs, then we adopt the mental state. So the mental state is panic, fear, confidence, all these. So you can Google and prepare and make a list of all the mental state possible in trading and see what mental state you bring when you're trading. Then based on that mental state, that particular mental state, when that situation is happening, you execute the mental strategies. So so when you're executing the mental strategies, what resources you are accessing from your internal brain, from your brain, what resources you're accessing to execute the mental strategy. So based on your beliefs, so I'll give you some examples. Based on your beliefs, you adopt a mental state, then you execute your mental strategies. So experts say that your success in trading, in the 60% of your success belong to this factor alone, you. So it's you. 60% of the success is coming from you, meaning that if you take a trade from someone who sends you the trade and say buy this or sell this, um, doesn't matter what the person is saying, buy here and sell there, or even if he didn't send you the sell alert or the getting out, you are doing your own thing because you have your own beliefs, your own mental states, and your own mental strategies. I give you another example. So my friend, he said, you note the market will fall on Tuesday. So the other friend said, so how you know it's going to fall on Tuesday? He said, well, I have done this study. Market falls on the day after Christmas. So, so that's the belief he's bringing. The market falls on the day after because I've done the study, and market falls the day after Christmas. You will see. So I said, okay, the market falls and it will fall, and I will lose some bunch of money on my open position and I will get out. So it's okay. So now, so 60% of your success depends on your beliefs. The 28%, so I will explain to you how this 28% came. So 28% success comes from your risk management. So 28%. And what is risk management? It's how much you are willing to um, invest in that trade. So the question is how much you are putting in the trade, and where you will be getting out. So meaning your stop loss. So how much you're investing and where you will be getting out. So there is an equation here, formulas here, which is very easy. Even your 8-year, 9-year-old daughter, like my 9-year-old daughter, can do it if I teach her. So she in my office, she has her own little chair. So from time to time, I make her sit when she's off or in the evening. I just make her sit next to me and I try to teach her. So I'll explain to you what it is, and you can teach your daughter. So she will contribute 28% of the success in your trading. Or you can simply take a notepad and do the math, or open your calculator. So keep your calculator on your phone and you can do the math. So risk management takes, or you can develop an Excel worksheet and put some formulas, and it will contribute 28% of your success towards your 28% towards your success. So beliefs, mental states, mental strategy, 60% is you. 28% is coming from your notepad or the Excel worksheet. So you can develop. The 12% is coming from your trading system that fits you. So I'll explain to you how you should be developing, what overall. So 12% of success come from your trading system. So trading system is something where you get the trade, like what you see on the screen when the market open. What you see, do you see Baidu moving? Oh, I see the Baidu moving. I have seen this move before. I recognize it, it's familiar, and I'm feeling good. So I buy some Baidu, and then it moves up a little bit, and further confirming, then I'm feeling more good. So I buy a little more, and then I buy a little more because I'm feeling good. So, so that is my trading system, right? So there are many kinds. I will give you some examples of 12 trading system or 13 trading systems you can build. Go and do the research, and you can build the trading system. So trading system is the means the the thing which is telling you that buy this from, and this is the entry point, and this is your exit point. So exit point is your stop loss and your targets. So exit point is your stop loss and your target, and it's contributing 12% towards your success. So it means if you don't, if we don't control or know how to risk, how much we need to invest, and where we need to get out, um, uh, which is contributing 28%, and then we don't know about ourselves, then 88% of the success factor we are ignoring. We are just focusing on this. So think about this, and I'll explain to you a little bit in this 1.5 hour session. So, we know that um, we are the most important factor in our trading. So just think about this, that you are the most important factor in trading. And there are a lot of, so think about this is you, but there are a lot of things going on with you internally and externally. So externally, think about all your family members. They are affecting you, your spouse, your children, grandchildren, your brother, your sister, your friends. Like today, the two friends I met, somehow they affected me. I mean, I stayed with them for 2 hours, but they affected me somehow. They tell me, I think the market will fall on Tuesday. So you see how they little bit affected me. Then and I'm telling them how you know they're affecting me and telling me, hey, which stock I buy? AI stock. I said, I don't know which AI stock. If I tell you buy today and then it will tank tomorrow. So how do I know how much you bought and what do I know about your portfolio and what else is going on in your life? So I have no idea. So you see how I could have affected them and how um, they affecting me. So think about that, and your financial objective. So um, I mean, you have a business, you have a 9 to 5. What financial obligations you have? What is your age? I don't know. So only you know. So it's you who know the best. I don't know where you grew up, what's background you have, which country. uh, so I grew up in 4 different countries, so I have my belief from the 4 different country. I grew up, most of the time I grew up with my mom, so, and my uncle. So my mom and uncle gave me certain beliefs, so I have that belief. So I'm very unique and you are unique, so I bring those beliefs in my trading. When I started trading and I quit my job, my mom was not happy at all. So she was bringing her beliefs and she was affecting me, and I think she is still affecting me. God bless her, she passed away, but somehow in some corner of my brain she's affecting. And then the word was her thesis that you know, why you have to trade? Why did you quit? You have had a nine to five job. Um, why you have to make so much money? You look at your brother. He has a job. Also, he comes home, wife, children. Then he turn on his TV. He watch some movies. He eats 3 meals. You eat 3 meals. He sleeps on the same bed. You're going to sleep on the same bed. Do you go to Costco to buy your grocery? Yes, mom. Okay, well, he goes to Costco also. So what's the difference? So he drives a car, you drive a car. Are you in a bus? No, I'm in the car. So what's the difference? So you see how she was affecting me. So I had to negotiate with her. The more money I can make, the more things I can do, not for me, but uh, for others. Maybe I can contribute my time, or I contribute towards charity or some cause. So I can do that. Yeah. You see, the tax collector affects you, and you never learn, John. I don't know what's going on every year. So I have a friend, John, who's my mentor, and I I was planning to send him the email that if he comes, if he can honor to come as a guest and teach his wisdom. He's a real estate expert, and I getting mentorship for last 2 years, 3 years just for on a real estate, and I really progress. So you see, this I'm doing it for 15 years, and real estate. I wanted to learn about the real estate, and I met John. So I knew John for 10 years. I think John is my. I was telling you, John, you are the senior most member of mine. I mean, if I have to sort on the date that who is the senior most member, so it's John, and he's my mentor, he's my friend, and so one time my son visited, and I told him, hey, I'm going to introduce you to, and my nephew came. So they're young, and they came. They said, so I told them, hey, I'm gonna take you to my friend and introduce you to him. So they said, okay, let's go. So I drove them, and I introduced to John, and they were surprised that 80-year-old person, your friend? I said, yes. Do you see his hair? He has a lot of white hair. How many white hair you have? So learn from John. So John every year pays a lot of tax. I don't know. So John tells me, tax, hundreds of thousands. I don't know how much, what he's doing, but he pays hundreds and thousands of dollars every year on tax. So I tell him, maybe you need to change your accountant. So So tax collector is affecting him. That's what he's writing. Tax collector affecting me. So you see tax collector affect you, and then you go and liquidate some of your stock because you have a tax bill. So I don't know about you, but yes, tax affect me too, but it's okay. So only you know. So only John knows what is affecting John. So the thing which are affecting me, although John knows in and out of my life, no one else except John. So think about that. Now, this trading belief, your trading belief. So when we come to the market, so I listed down some of the belief, and the end of the session, I will show you another 3 slides on the belief, and then I will explain to you, based on the beliefs, how we react to our trading system or anything we borrowed from someone. So when you borrowed something from someone, you're bringing that person's belief. So it's better to create your own. So when you create your own, it's based on your beliefs. So you can borrow something from that person, and then you can modify based on your beliefs, and then you can use it. So I'm giving you some example, and I'll give you some example at the end. There are 3 slides, and I'll show you how we behave um, in the market based on our beliefs, using just one system. So system A, let's say system A, and 100 of us, we will all behave differently. So I will explain to you through the matrix. So I try to explain things. I'm always thinking, how can I explain this in a simple way to you, to convey to you, because I'm also learning. So I'm always taking notes. So whenever something pops up, I just take a note right away, and then I try to explain. So I'm explaining you the trading beliefs. So think about this. When you see a candle, so do you say, I'm sure that candle is telling me something, or a bar that is telling me something that, is moving up. I think I go buy 1,000 shares. Or you have an indicator stochastic, and then you see, I'm sure a stochastic is giving me sold out reading. Like my friend, he's saying, I'm sure the market will tank on Tuesday. And then he smiles and he look at me, and then other friend look at him too. Okay, so he's like in his 70s. So how you know the market will tank on Tuesday? I'm telling you, I've done the research. Market tanks next day after Christmas. So okay, if the Christmas is on Friday, so I'll wait for 2 more days, and then on Monday the market will crash. So think about this. I'm sure this moving average will hold. So think about this moving average. So what is moving average? Just name moving average is moving. See this moving. I'm sure this moving average will hold. So this moving average. So which moving average? There are 365 days in a year. So think about it. There are 365 days, so there could be 365 days moving average. Now you can become a little fancy and say, okay, simple moving average, exponential moving average, adaptive moving average, weighted moving average. God knows what. Some people have a lot of moving averages on their screen, like a ribbon, like a like you are in a rainbow. So that kind, and they don't even know which moving average is what and what color they have. So think about this: when you go on any trading platform and they have some default moving average, like 20-day moving average, 50-day moving average, 100-day moving average, 200-day moving average, the exponential moving average, simple. So somewhere the candle is sitting, that bar is sitting in some moving average, and if it doesn't fit, let's say you can change. So it says, okay, 20-day moving, and maybe you can change a little bit and it says 21 day. So now you say, okay, you see this this market holds 21-day moving average. Or I think market will tank soon after Christmas. My friend today, he said, I think market will tank soon on Tuesday because so now another thing. So and then he said, I've been trading for 40 years, and I have the data. And then during on the same conversation, somewhere in the middle, he said, 40 years and I have yet to make any money from the market. So you see that? So the other friend said, 40 years and you have yet to make money, and the market will tank. Yes, market will tank on Tuesday. I'm telling you. So he's saying, I'm sure market is telling me something. Another one, I'm more successful in downtrending market. So some traders, they just want to short. They just want to short, and they wake up when the market starts to. They don't tell you how much drawdown they had or how much money they lost shorting the market. They just wake up and they even come on TV and brag. It's a bear market. So if you have this belief, I'm more successful in downtrending market, you are missing out the other side of the market, more successful in uptrending market, or more successful in a side of the market, or maybe I'm successful in all kinds of market. So you miss out the equation. So the downtrending market is very hard market. It's difficult market, is volatile market, and most of the traders lose in downtrending market. If you stand to make money, you stand to make money in the up market. I mean, just demoralizing to how it's demoralizing. Your friends are saying losing money. You open the TV, people are just, and you see everything red. So it's negatively affecting. So unless you're very expert. So the same friend of mine, he said, I know one guy, he made 700,000 shorting Carvana. So how do you know? Maybe he's right. And then you have to ask, millions of traders maybe lost money in Carvana, and someone who made 700,000 shorting Carvana. So, and then you think that if a guy can make $700,000 in shorting Carvana, I think I can do that too. So think about that. Another belief, I'm sure T-bills are going to have a major correction shortly. So major correction shortly. So you go and bet, you cash out from T-bills or whatever, and then you go long in the market, stock market, and then you lose money in the stock market also. So think about this, all your beliefs. So now you are bringing those beliefs in the market, and the market is so big that it doesn't care about our beliefs. So it doesn't care on Christmas. After Christmas the market will tank, I don't know. So market is so big, we just trade the market, what is telling you. We cannot make a dent in the market. I mean, it doesn't matter even if you buy 1 million shares, there's somebody there with the 10 million buying power. So all we know is that um, we should make ourselves knowledgeable to understand what the market is telling us at any given moment, or day by day, or maybe week by week. So there are three kinds of market. There's a bull market and there's a bear market, and I really don't know, because a bull and bear is a 20% down and 20% up. By then the market is way up. So if I wait for the bull market um, signal, I missed out everything. Or if I wait for a bear market, I missed out everything. So it's good to know that there's a bear market or a bull market, but I have my own definition, and I'm giving you. So here I am giving you my belief. So you see, everything I'm telling you is my belief. So think about this. And you don't have to agree with my belief. I'm just giving you. So the market is three kinds: uptrending market, downtrending market, and a sideways market. So think about this. So uptrending market, you must have some definition of uptrending market. Is it a week by week uptrending, or week month by month, or whatever it is? So the way I divide it, short term, minor, I call minor trend, and then I call it, another one is an intermediate trend, and then another one is a major trend. So minor trend, based on the analysis, minor trend tells me short term. I get cautious, like I sit up, I pay attention. I say, the market is weak. So it's like yesterday. So the market was, when at the very end, it was, everything was red. I said, okay, um, cut down on the position and be careful in opening a new position. And this morning, the market did gap up. So I was paying attention what I need to see. So I saw QQQ gapped above the resistance. So now, so I was, on one hand, I was on a high alert because of the condition what happened yesterday, and this morning's reverse happened. So minor trend, based on my analysis, minor trend could have turned downtrend if the market had gone down, but it did not. So it's still, market is in uptrend, minor. So, and the intermediate and major. Uh, just yesterday or 2 days ago, I thought about the market analysis, how I do the analysis. I showed you the chart, and based on the total market analysis of Nasdaq, Dow Jones, Russell, and S&P, the minor trend, the major trend, and the intermediate trend and major trend, all of them are up since November 14th, and the market gave the up signal on November 1st. So that's the definition. So minor, intermediate, and major. Now, there's another thing you need to analyze, just not the trend, because the trend could be weak. So we need to analyze the strength of the market. So I do that, and my system do that. You can subscribe to my service. It's just 97 for the whole year, and it's the reason I just charging you 97, because it will help you. So it will help you, and it doesn't cost me much, because I do the analysis for myself, for my members. So I provide you that service. So just 97 and send the email. So strength is very important. So this way, the strength I analyze is the very strong strength, the strong, and mildly strong, and then neutral. And then on the other side is a weak, very weak, and very weak. So understand the trend. You need to understand the strength. So trend and the strength. The third thing is the volatility. So market, so you can define your volatility parameters. So I define the volatility, and then I come up with the conclusion what kind of a volatility level. So market can be quiet. So market can be quiet. Yesterday the market picked up some volatility. So market can be quiet, or market can be volatile, and the market can be very volatile also. So the most so it means there are six kind of markets here. You see, uptrending quiet, uptrending volatile, downtrending quiet, downtrending volatile, sideways quiet, sideways volatile. You can go find. I do further analysis. I have two more. mm, um, category of volatility. I call it normal, and I call it very volatile, but that's too detailed. But I define it and I read it. So quiet, normal, volatile, very volatile, four kinds. So now, if you look at the history of the market type, so if you go back and look at it, okay, where is the money made in a uptrending and a downtrending? So most of the time, the majority of the money is made when the market is uptrending and it's quiet, like right now. The market is uptrending and its volatility is quiet, is not very volatile, go up and down. The uptrending market uh, does not have a volatility. If the volatility increases, then the trend may be changing. So think about this. If the volatility increasing, the trend may be changing. So you need to pay attention to the volatility, that what's happening. If suddenly the market was nice and easy, and then suddenly the market changes and everything turned red like yesterday, so you need to pay attention to something is happening. It needs to go back to the normal manner, so like it did today, and back to normal. Now, when the market is downtrending, based on your definition, then don't expect the market to be quiet. So when we know the market is downtrending, we don't expect it to be quiet. It needs to be uh, volatile. So if we know based on the past data that is downtrending, then we don't expect that market to be quiet. We expect the market to be volatile and very volatile. So if the market we expect is volatile, very volatile, if we have a, first of all, we need to be very sharp in the downtrending market to be in and out. One day it goes up, one day it goes down. And volatility does the damage to option premium also. So think about that. Also think that the downtrending market doesn't last long, so it's short. It destroys everyone, even the bull and the bear. So the good idea is to stay away. Now, the sideway market is a choppy market. So this is where you need to implement your sideways strategy. So think about it. If you figured out that this market is sideways, then you need to adopt the sideways strategy. If you're adopting your trading strategy or using the trading system, which is meant for uptrending market, you will lose money. So based keeping this in mind, and must have this data, must have way of knowing the conditions of the market on every day. The like early morning when the market, futures market, turn on the TV, see what's going on. So my day start at 4 a.m. So 4 a.m. I check it and I'm ready. By 10 a.m. It's kind of 10 a.m. is like, oh my goodness, it's only 10 a.m. and how much I've worked, because you started the day at 4. 10 a.m. looks really too much. Like it's already gone 6 hours. So come to the market prepared, and as soon as the market open, pay attention. The first thing you do, you're paying attention to your open position, but you are paying attention to the market fast. Don't let it go till you feel comfortable. And from time to time, you just look at the market and see what is going on. So I do all that, and it's just $97 for the whole year for you. So published price is priceless. So there's uh, no price. Just pay 97 for the whole year. You can send me email, my team success@tradegenie.com. You can call this number 212-930-2245 and just enroll in this service. If you don't have, it's 97. Now, now think about this. So it's you and the market. So I explained to you there are 6 kinds of market here. Now, there are 2 kinds of market missing here, which is uptrending volatile and normal, and uptrending very volatile. They are fine detail, but just think about it. There are 6 kinds of market. So for one trader, um, uptrending quiet is the market where he says, you know what, I will stay in cash, and when the market becomes uptrending quiet, I will come in and do the 100% of the investment. So let's say he has $1 million in his account, and he just is in the cash parked in some CDs, and then as soon as he recognize, he cash the CDs, the short term, just cash the CD, and then come in and make the money and go fishing. When the market changes, he goes fishing, and then he park the money again on CD. So think about this. So or another trader, he's short term, and he said, no, I want to trade volatile market. So he's coming and only want to trade the downtrending market and volatile. So as soon as he recognizes this, he comes in and he trades. So think about this. One trader wants to make money uptrending quiet in an old-fashioned way. So this is old-fashioned way, like sitting on a golf course, like my friend, and this just chilling. So that's uptrending market. He doesn't like the volatile market. He sent me email, market is crashing. So I know John is not happy. So this is the market. So think about this. So this is John. Let's say he likes uptrending quiet market. And this is Tom. Tom likes downtrending volatile market. So there's, you see, two different kinds of trader. So now you put those 2 kinds, and there are millions of traders. So this is the intersection. So it's you bringing all your beliefs, and you're bringing your beliefs about the market. So it's you, who you are. You could be 25, you could be 85, and then the market could be any one of the kind. So when the market matches you, this common intersection, that's where you make the most money, because the market condition is matching your objectives, the age, your risk profile, your time availability, your skill, so many factors in understanding. So maybe you have other business to take care of. So think about this. Some traders, they don't trade during summer. I mean, I say, my goodness, market is moving up so much and it's so nice right now, it's quiet. And then they say, no, summertime I don't. I go to Florida, and I just sit there. I said, oh, sit there, play golf, Florida. You not trade a little bit? Or no, 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 summertime is for this. Another trader comes, Christmas time, Thanksgiving, I gotta be with my family. I don't trade. Come on, the market is rising up. This is the time to make money. No, no, no. So this person, let's say, miss out all the move during Thanksgiving and the Christmas. So for me, no, I I'm ready when the market is telling me that you need to be ready. Market doesn't care about my vacation or my holiday, etc. I'm ready when the market is telling me you need to be ready. So you see, this is a common intersection. So think about this. Now this will get smaller and smaller, because I'm trying to teach you to be laser focused and full concentration, just like a mirror. You see, the mirror can burn the paper if you laser focus. That's what we learn when we were young. We get the lens, that convex lens, and then we aim it towards the sun and burn the paper. So that's the way you make money. So I'll explain to you how this circle, this intersection, this Venn diagram get smaller and smaller and smaller, very small. So think about this. So now the next thing is, so and then you know the market. Now you say, okay, I know myself, and I know what kind of a market I want to trade. So I know I'm John, and I know I like uptrending and a quiet market. So what kind of a chart pattern, what kind of a system I use that will fit me? So only fit me, not you, not anyone else, fit me. So I go and look for, like I go hunting, or I spend time developing my system. So think about it. It could be a trend system, it could be a breakout system, it could be a band system. So for a person who, uh, let's say John, so uptrending quiet market. So, so, so what John will do? If I were John, John will say, okay, I want to develop a system which is trend system. I want to get in the trend. I should be able to identify that this stock is uptrending. So I should be able to identify the entries. I should be able to identify the proper support, proper resistance, proper pullback level. So I can trade. Maybe I can do some covered calls. Maybe I can do the naked puts. So all that. So that's what John does. So uptrending. So you see, so when the market is uptrending and it's John goes and find the uptrending system. So uptrending and quiet. So now the job is to develop that kind of a system which fits you. Another person say, no, I want to trade sideway market. So I go and develop my sideway market. So if that's his thing, he goes and develop his sideway market. Now, the market, as we know, there's an uptrending market, there's a downtrending market, and there's a sideway market. So at least we need to have two systems, one to trade to the downside and one to trade on the short side. So think about that. If you have just one system towards the long side, when the market is downtrending, your system is failing. And then you wonder why my system is failing, because your system or the techniques you have, the skills you develop doesn't fit the downtrending market. You have ignored one side of the market. You did not develop it. So just like they say, you develop one side of the muscle, then you develop the other side of the muscle. So do that. So I'm just giving you example that long system and the short system. So think about this. Now, when I when so I'm still, and when I was starting, I met a person named Chief at that time, Chief. So I asked Chief, hey Chief, so many systems. What do I do? I'm going crazy over here. What do I learn? So he said, no, you don't need to learn everything. So there are so many things in the world. I cannot go and learn everything. I just focus on few things. Just focus on few things. Figure it out what matches you. So I realized that I cannot trade the Bollinger Band, and the candle goes on this, sit here on this moving average, and then it moves up. So I was not like that. I said no, 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 no. Bollinger Band doesn't fit me, and so I developed my own style, and I tried to learn those system which fits me. So think about this. Ask yourself what your criteria. So let's sit down on paper, and then you say, okay, I need the system which is consistent. So it's consistent, meaning when you see something, it behaves the same way. It's not like one time it behaves this way and then another time it behaves this way. So it's not consistent. So you have some consistent, like there is a funnel, and then at the end there's a hose, and at the end of the hose there's something is coming consistently. So think about in this way. So something consistent. You don't want a system, or you don't want to master some expertise which you can apply once a year. So it's not good. The more you can apply, the more you learn. So and the more the more chances you have. Or you just say, okay, no, I get a one trade per year and it makes me money. If that's your thing, you can do that. So consistency. So the frequencies, I'm talking about the frequency. So if I master a head and shoulder pattern, let's say I'm a master of head and shoulder, so I'm just waiting on a head and shoulder pattern, and it's not appearing, and I'm just waiting and I'm waiting and waiting, and the head and shoulder pattern is not coming, and finally it comes. And then I get excited and I say, okay, here's the head and shoulder pattern, and I go all in, and that head and shoulder fails on me, or I did not notice it when it appeared. I was walking the dog, and I came back and it gone. So I don't want that kind of a system which appears once in a lifetime or once in every 3 months, or if I miss it, I miss it, and there's no 100% guarantee that it will be a winner. And then the third one is reliability. So how reliable is what you are studying or you're learning? So think about that. And then the last part is the reward. So there has to be some reward, bigger reward than the loss. So if you are mastering something and there's a little reward, so it's not, so you need, if the reward is less, you need a very high percentage of win. So if the reward is less, think about it, the reward is less. Every time you get in, you just go for a little catch, a little, you're capturing little, but then if you fail, you lose a lot. So reward, so in terms of reward, it has to be, the risk to reward ratio has to be in lot in your favor. So if you put, if when you're trying to learn something, put these four together and in front of you. So that's where you can master some key trading system. So think about this. So now, uh, so then you say, okay, I need to develop my system. So you're trying, and you have bunch of ideas. So bunch of ideas, and you're trying to develop. So you have ideas, and you know that this thing work. I need to develop my system. So develop your low risk trade idea system, and I'll give you the definition of low risk trade idea. So you develop your trading system low risk, and the low risk doesn't mean that the risk is just 5 cents or 10 cents. So I'll give you the definition of low risk. Once you develop it, then you need to execute flawlessly. So you develop and then you execute. If you just develop and don't execute, it's no. People have ideas. If you stop someone and like a guy on in a shopping mall and say, hey, do you have any money making ideas, and then he will give you a lot of ideas. But so you ask him, so what happened? You have a lot of ideas. He said, well, I cannot execute. I don't have the ability to execute. So not only you need to develop your ideas, but you should be able to execute it. If you borrow somebody's idea, you may fail to execute because that's his idea. So think about that. You need to have your own or or idea, or completely believe in the person whose idea you are borrowing or you're adopting. So you need to, because the belief need to match. So your belief needs to match. Even so, if you use somebody's system, so you believing in it, but then you're failing where? You're failing here. We fail here. So we borrow the system from someone or some following it, but then we are failing here, mental states and the mental strategies. We are just failing here because we don't have that mental state. Uh, when at any given moment it's different. My mental state is something, you're is something, and you're on the other side, I'm on the other side, and we don't have a mental state, same mental state. We are not executing the same mental strategy. We are not accessing the resources, which comes from our experience at any given moment, and we fail. So think about it, why we fail? Because the mental state and mental strategy is not same, even though belief is same. So belief is same, but the mental state, mental strategy not same. Even though the system is same, but you're still failing, or I'm failing if I follow, because I'm bringing a different mental state. So to develop and execute. Now the definition. So definition is, so this is a 4-line paragraph, and this definition has many keywords, and each keyword has a meaning. So so next time I'll show you, and I bold it or it highlighted it. So a low risk trade idea is an idea with a positive expectancy. So what is positive expectancy? That when you add all your winners and your losers, you have a net gain. So think about that positive expectancy. When you net is your, you have a positive that is traded at an exposure level. So now think about this exposure level. So exposure level is the how much you are willing, you are investing. So I give you out of from outside of trading example. So John, it's so when I one day John said, hey, I want to introduce you to this side of the money making. What it is? Or he said, investing in the real estate deals. So I will introduce you to these people, and then you can invest in the deal. I said, okay, I want to learn. So in order for me to learn, and I learned that I need to have a little exposure, not just go all in. If the deal comes $1 million, and then I say, okay, I'm all in 1 million, and then I don't learn, I just sit there. Or if that deal goes south, I'm the only one sitting there with all the exposure. So I want a little exposure, maybe 4%. Maybe I put in 40,000. How much, John? How much you are investing? Okay, let's go 40,000. Okay, this in this deal 40,000. Another one at 40,000. Another one 50,000. So if one deal goes in a foreclosure, it's not going to hurt us much compared to if we are in just one deal. So think about this. If you bring this, so one trade or even bunch of 5 trades does not affect you as much. So you trading at an exposure level that allows you to survive. So allows you to survive. So in terms of real estate, allows you to survive the foreclosure, allows you to survive the loser trade, the worst possible contingency. So the worst possible contingency in trading is what? Especially in option trading. The worst possible contingency is that the whole trade goes to zero. So, like John says, CEO pinch a girl, and there goes the stock 12% down because the news comes out, the CEO pinch somebody in the office. That's it. That's all it takes, and your option goes 100% loss. And you say, what? Why he has to do that? So you see, and then if you are in the 5 trades and all of the CEOs are doing the same, all those 5 trades are 100% loss because it's option trading. Maybe if it's a stock, it will recover, eventually. But option, it just tanks in the short run. So for you to survive the worst possible contingency in the short run, so that you can achieve the long-term expectancy of the system. So you have a system where you say, okay, I'm not going to cherry pick. I sit quiet, and let's see if the way I trade, if I'm getting only one trade out of 400 symbols, that's the only one I will take. If so I give you another example of real estate. If somebody is throwing a lot of deals every day I'm getting email, deal. I am not going to take all the deal. I just sit quiet and take only one deal. So I sit quiet and choose the one which fits my criteria. From 1 to 10, it needs to be at least 9 and 10, because I know if I take those 9 and 10 over the long run, I will be successful. From time to time, one of the deal, because of my the circumstances beyond my control, I will suffer the drawdown. So in the trades beyond my control, there will be some trades which will go the opposite way, and I may lose a lot of money, but even then I will survive. So what I will do, I will, when I'm putting the trade, I will control my emotions and I'll say, watch out, Noshi, you are going all in. And that's the trade which will turn south and you will lose. So John is sending me something. So that's traded an exposure level that allows you to survive the worst possible contingency in the short run so that you can achieve the long-term expectancy of the system. Once you have nailed down this, then you're sitting quiet and you say, okay, I will only take the trade. So someday there will be a multiple trade, and someday there will be only one trade, or someday there will no trade, or someday the trade you are already in, and that's the trade you need to add more money into it, whether at the higher price. Don't hesitate to add more money at the higher price, and sometimes you need to add more money at the lower price. So people don't want to buy more when, the people have the tendency, they want to average down, they don't average up. Whereas the best is when the stock is moving up, you scale in, you average up more because you're already big in profit, and then you add a little bit more at the high price. It's okay because it's moving up. People tend to do the average down. Some they say no, never add more money to a losing trade. So that's the belief. You see, that's the belief. They never add more money to the losing trade. What if the losing trade has just started to rocket upward? So your original thesis is true now, and you need to add more. So once you do all this homework, you come up with your system. Now, you have to execute that system. So you need to develop your trading rules and checklists. So this all comes in the planning process. You have to develop an edge in the market. So now edge in the market, it could be, so there could be many. So I give you some example of edge. Maybe you have analytical skills. Maybe you have a technological skill. Maybe the edge is only that you sleep at 8 in the evening at night time. Like John, he goes to bed at 8. That's what I am assuming, because no communication after 6 unless in emergency. So go to bed at 8, but wake up at 4 o'clock in the morning. That is your edge. So think about it. A person who wakes up at 4 in the morning and he does his push-ups and meditation and get ready in the market, he has an edge over the person who comes in the market 2 hours later when market is already up and then he's coming in the market. So think about what edge you have in the market. Then you're executing it. So capitalize on the low risk trade ideas. You're ready. Not only that, you need to have a process for stocking the trade to control the risk. So stocking is very important. So one day I was getting ready to teach the stocking course. I have a 2 hour session on stocking, and then my daughter came and she said, "What, Daddy, what are you going to teach today?" And I said, "Dad, daughter, today I'm going to teach stocking." And she said, "Really? You teach stocking?" I mean, she was shocked to when I told her I'm going to teach about the stocking. So I had to explain, but she is little, she did not understand much, but she was shocked that Daddy is going to teach about the stocking. So stocking the trade to control risk. So now think about the stocking. So when you see the trade, you need to stop, meaning already you have made up your mind that you want to enter in this trade. Now you don't want to act as a long-term trader. So think about it. You don't want to act as a if you're a long-term trader, let's say you have a belief that the Boeing is the ultimate and it will go to $1,000. So it doesn't matter if it's going to $1,000, if it's you buy at 260 or you buy at 262. So like my friend today, again Boeing, he was saying, so my nephew told me that you buy Boeing and you can never go wrong. So I said, well, it depends. You can never go wrong, which where you enter. The Boeing was trading one time at 440. And the last time I checked today, I have a position in Boeing also, and it's a long term. So I said today it was 262, and I think it went to 80, 85 during the COVID time and when the orders were canceling. So you can never go wrong. Yes, you can go wrong. You bought at 440 and you see it at 80, unless you are you are a long-term investor and you want to give your Boeing to your grandkids. So maybe it's okay, or you have a strategy to add more to the position. Then another friend said, I think we just buy index fund and just hold it forever. So I said, well, that's not he said the Warren Buffett advised that you buy index fund and you hold it forever. So I said, okay, Warren Buffett advised to hold it forever. I think you're missing out a lot of things. Maybe he's saying to a dollar cost average. So every now and then you put more money into your index fund. Otherwise, index fund you buy now, and then you hold it 20 years. So during this 20 years, you see all kinds of drawdown, 20%, 30% down crash market. So you don't not going to make money. So you need to have a strategy to add more every month or every week or every 2 weeks. Then you make a lot of money in the index fund. And that's what I think Warren Buffett is saying. Not he's saying that just buy it and hold it forever. Maybe you will make money, but ordinary. But if you have a dollar cost averaging, you will make money. So the point is, so I need to ask, we need to ask, uh, is it a long-term trading or is it a short-term trading? Even if it's a long-term trading, we need to act like a short-term trader for our entries. So which means we are controlling the risk. So I give you mathematical example, and I every time I forget to create a table. So just think about this. If a stock you identify at 100 level, so entry at 100 level, and you know the target is 110. So the target doesn't change if you enter at 100, you enter at 102, or you enter the trade at 98. The target is 110 because that's the way you read the chart and you say, okay, I think it's going to 110 and I enter at 100. So if you enter at 100, the target remains the same at 110. So that's the 10 point. Now, based on your system, the worksheet I said you calculate based on your portfolio size, based on your risk profile. If your portfolio is 100,000, your risk is that you say, okay, I will not lose, or I will not lose more than $2,000. So based on all that, you will determine how many shares you will buy. So if entry at 100 is telling you you can afford to buy let's say 500 shares, maybe the entry at 98 will tell you you will buy more shares. When you buy more shares, the same chart, same target, you just reducing the stop loss per unit. When you reduce the stop loss per unit, you buy more shares. And when you buy more shares or more contracts, the target is same, you will end up making more money. So if you do the calculation, maybe it's double, 200% gain. Instead of 1,000 shares, 1,000 profit, you may end up making 2,000 profit. So do some calculation on what difference it will make to your trading if you do some calculation, put your portfolio size, put your risk profile, how much you want to lose, and then based on that, you reduce your entry point. You will come up with the number of shares it will be increase, or number of contracts, and then when you sell, you will sell for the per unit gain. So instead of from 100 to 110 is 10 point per unit. When you enter at 98 is 12 point per unit. So 12 point per unit, and then you're buying more shares. So you can do some calculation and see what difference it makes. So you have to be very precise with your entries and exit and execute the trade ideas flawlessly. So you're playing the game perfectly. Now, after executing, you have to have a process of monitoring the trade. So think about it. I have, so the system should be that even if you have 50 open position, you should be able to monitor it. So you have a system where you can, or automated it, or the way it's set up that even if you have 40, 50 trade, you are getting a proper alerts and proper monitoring. So how the two kinds of monitoring. One is overview monitoring, and another one is the detail monitoring. Overview monitoring is the from the 30,000 feet, and detail monitoring is like 10 feet. 20 feet. So not all symbols you need to watch during the market in a detailed manner, only the few symbols. So when the market opens, everything goes in a detailed manner. All the futures market, all the cash market, all the ETFs, all your open position. I'm not looking for new position. I don't care about the opening a new position. I'm worried about my open position and which one out of my all my open position, which one is telling me that I can add more to the position. Let's see, TJX. Oh, it's moving. I think I can add a little bit more. Oh, Google is looking good. I can add a little bit more on this. Baidu. Okay, I already have a Baidu. Maybe I can add more. And now I added more to these three positions. And then I say, okay, so these three positions now, which one is moving further, further, further? So add more. Which one giving confirmation? So that goes in the detail monitoring. Others are just sitting in the overview. So, and then from time to time, early morning, I noticed QQQ gapped up. So now it gapped up. So that's a bullish sign. So it negated yesterday's negative down move. Today it's up, and not only up, it's gapped up. So I said, okay, it gapped up. Now it needs to hold. So it was like 407, 406, 50, 60, and then it was coming down at 40. It came down to like 405. So I said, okay, the gap is not holding. So constantly watching not only QQQ but the overall market. So overall market is what? Is the Russell, the S&P 500 symbols, the Dow Jones 30. So you need to do analysis on what else is going on. So being aware of market conditions. As the market is showing the strength and you have the buying power, you can add more to the winning position, the one which is moving. So which one is moving, you adding more to the position. And simultaneously, you're trying to see, based on this definition, trying to see, is there anything else I can add to my position, the new position? So whenever you're adding something new to the position, that is very risky, because you're making a decision at that time. When you're making a decision, um, you can go wrong right there. And that's the trade that can lose money. So whenever you're executing a new trade, you have to start slow. But if you are in the trade and it's making money, you can add more to the position. So all this goes on. So now think about this. So market, let's say uptrending and quiet. And I have a system which matches the market, which is uptrending and quiet. So there is a common. So if I draw the Venn diagram, I have a intersection here. The trading system that I have, which is uptrending and quiet, matching the kind of the market, which is uptrending and quiet. So think about this. Now, so those two, now you take the variable, which is the most important, is you. So you are the most important factor. So let's say I'm John and I have a risk profile. So I'm John and I have a risk profile. I'm 80-year-old, I'm retired, I have this objective. This is the portfolio size. I have other thing going on, and I like the market which is uptrending, and I have a proper trading system which is uptrending quiet. So now John is focused on this. So his focus and concentration on this narrow. So it's going further narrow. So you see, before we had this, I go back. Before we had, so it's John here and the market. Now, John developed a system and he's more, so not only is John is here and is the market, and then he's using the system which is matching him and the market. So think about this. It's getting more finer in laser focus, more finer. So I'll explain to you how two more steps we can go down, two more steps to get really focused. Now think about your trading horizon. So different traders have different objectives. So one trader is a scalp trader. So I sent one trade to John, and John said, okay, my stop is here, and after 15 minutes, I'm out. So I said, what? So now you're a day trader or what? So he said, LOL. So you see, so that was his. So John is saying if John loses money, he will be moving in Noshi's house. And where is that house? So, so scalp trading. So think about this, your trading horizon. So if you may be a scalp trader and you could be a day trader, you could be a swing trader, you could be a position trader, you could be a long-term trader. So you you could be anyone, your objective, you could be all. So you have a different account to trade, different style of trading depending on your horizon. Maybe you are a scalp trader in one account, maybe you're a day trader in another account, maybe you have another account for swing trading, and there's a retirement account where you have Boeing, Apple, and CRM. So you just have three positions. You say, okay, long-term trading, this is a Boeing, long CRM, and Apple. I'm a long-term trader, investor. So think about this. You are adopting a different hat in the same day. You could be adopting a different hat. So think about this. You are putting on a different hat. You have a different account for each kind, and then maybe you are a speculator also. So if you are a speculator, you have an option trading account or a stock account just for speculation purposes. So you shouldn't be mixing your speculation account with your long-term account. You shouldn't be doing that, because speculation is speculation and a long-term is long-term, or something like that. Or a swing trading is swing trading. Don't mix it. When you mix, you just don't know. You just borrow money. Even if you have $100,000 and you say, okay, only 75,000 I will put on the stock and 25,000 on the option, and I don't mind losing 25,000 because I'm shooting for the moon. But then what happened? You go drift a little bit on the stock side. So from 25,000, you say, okay, 30,000 on option and 70,000 on stock. Then you start to make money, and then say, okay, I will go further down. And then by the time you realize you are 100% trading on option, so you started somewhere and then you change it. So think about this now. So based on your horizon, this trading horizon, you would have a different trading strategies, even though it's the same system, same market, same you, but the account is different and you're trying to achieve something. So you will be having a different trading strategy. So I created this to explain to you. So your trading strategies, you're creating your trading strategy based on what you're trying to achieve. So your financial objectives, the leverage, if you're using the leverage, such as option. So option is a highly leveraged instrument. Availability of time. Maybe you don't your financial objective and use of leverage is there, it's fine, but you don't have you are not available. Maybe that's the way your daily life is. So you depends on your availability. Your account size depends on your account size. Trading strategy. Some, if you have a certain account size, the broker, your they will not allow you to trade that kind of a strategy. They say no, you have to qualify, have a bigger account size. So think about this. If you have a trading horizon of a scalper, you will have a different trading strategy compared to a swing trader. And on top of that, depending on your skills. So your skills, your objective, your leverage, availability of time, your account size, trading horizon comes determine your trading strategy. So give you example, you may be buying a same system, same you, and same market, and you see something. So you, instead of buying, you can buy shares. So you can buy shares, go long 100 shares. You can use the same, you can buy options. So you go long calls. You can create a vertical spread. So you say, no, I like to have a vertical spread. So we have a vertical spread service. If you're interested, send me email at success@tradegenie.com. So you can create a vertical spread. And then you say, no, I want to collect the premium. So I go sell the puts. So you see, same symbol, same system, same you, same market, but then you say, no, for this, I sell puts. For this, I do covered call. For this, I do vertical. For this, I buy options straight. For this, I buy shares. So different strategies you're adopting. So what you're trying to achieve. So keep this in mind. Now, if we take the intersection of the market, the trading system, and the strategy, then your focus is more narrow now. So you're getting into a smaller area. So market, system, and your strategy. So intersection. Some trades are not meant to be like no options available. So how you trade uh, calls? So some symbols they're looking so good on the chart, you know it's going. And then when you look at the option chain, then you say, what? The ask is 10 and the bid is 7. What is going on? And then you say, okay, maybe this is a glitch. Maybe it will stabilize. Maybe, maybe. And then there is nothing. No volume, no option, open interest. The ask is 10, the bid is 7. So what you will do? You will not buy option. But if you really believe the volume is there, uh, maybe you say, okay, you know what? I'll buy 100 shares. So instead of buying 5 contract, I just go buy 100 shares or 200 shares. So you adopt a different strategy. So think about that. So it's a same system gave you the long trade and the same market, but then you said, so you immediately you should be able to, or we should be able to quick thinking, very quick, that option is not there. How about I open this account, so another account, not that option account, because option account is for option. So log out, log in to another account, or that account is also open, and then you say, okay, this account I buy 100 shares because there is no option and I still want to trade that. So this is further laser focus. Now, so how now there are, last time I checked, there are like 9,000 symbols, 9,100. So if there are 9,100 symbols, I cannot trade all those 9,100. I need to trade the selected. I may miss out on some of the movers because I did not pay attention. I was not, that symbol was not in my radar, on my radar. And if it comes, I will add it to my list. I will do the research, add it, or I may have to delete, so clean up. So there has to be a process of adding new symbols. So symbols are just like, name it, dog, cat, doesn't matter, dog, cat, lion, tiger, whatever it is moving, it moves. So based on the liquidity, based on some criteria, volatility, based on technical analysis, you can perform technical analysis, such as it has a data of 2 years. If you don't have the data of 2 years, you cannot analyze it. So such as IPO you cannot analyze. You have to rely 100% on fundamental analysis, market analysis, option analysis, sector analysis, news and catalyst. That is, stock is always in the news. The price pattern, it creates a price pattern which you can read properly. It has a proper volume, such as, let's say, minimum of 1 million shares. It has a proper risk to reward ratio. Whenever you spot it, it has a proper risk to reward. So based on all this criteria, you need to do the research and bring the symbols, and then you study those, and you're trading it. When you're trading it, you have a history because you have a trading journal. When you have a trading history and you have a journal, you are well versed with those symbols. So those are your vehicles to make money. So now you're getting familiar with those symbols. So if you do the analysis, here's the chart I'm trying to show you. So if you put all those symbols, let's say 9,000 symbols, and you say, based on liquidity, volatility, and options, and they are in the news, I bring all those symbols into a bucket. So let's say you have a big bucket, and you put those symbols. So you say, okay, now I got 400 symbols. So what to do with it? So you cannot focus even 400 symbols. So then you say, okay, so I came up with the way I'm teaching, not teaching, but playing chess with my kids. And I believe chess is a very important game, it's a strategic game, and every parent should teach their children to be strategic from the young age. So chess is a game. So I'm teaching kids play chess, and I'm also learning. So in the chess, these are the players: kings, queen, knights, bishop, rooks, and pawns. So everybody has their move and the characteristics and the power. So king in chess is just, dead. Uh, I mean, king is just there and doing nothing, cannot protect itself. So everybody is protecting him. The pawns are just getting uh, clobbered. So I learned pawn is a very complicated player. in the chess, although it looked like pawn. So, and king is dirt. So queen is the most powerful and the pawn, and then others have their own characteristics. So what I did, I put all those buckets, and then I say, okay, I need to categorize them. So I pay attention in when the market is moving, I really need to pay attention to those symbols like must. And then I go further into another list. Then I go to another list. So then I can focus. So I will explain to you, and then there are ETFs and inverse ETFs. So I'll show you my list. So this is not a comprehensive list, just to give you the example, the way I trade. So I'm systematic. So when the market opens, I look at it and then I go move further. So kings are those stocks which I need to know what is happening to them, but I don't trade them because they are high price, the spread is so wide, the options are so expensive. So I just don't. No. I cannot. These are too much. Like Adobe, ADSK, Autodesk, Broadcom, like so high. Booking, so high. Costco, Intuit, KLAC, Lulu, and MongoDB, and now these are very expensive stocks. But I watch them because they are expensive for a reason. So think about it. The stock which is a $2 stock is $2 stock. A property which is at the beachfront and selling for 50 million has a meaning compared to a property which is selling for 200,000. So think about this. So you need to, same for stocks. These are high price stock for a reason. So I watch them, but I don't trade them. Now, queens are those stocks which I need to watch. So what I did, these are the from the economy. So Boeing, Caterpillar, CMI, D, Disney, Etsy, FedEx, UPS, General Dynamics, Home Depot, Lowe's. So these I call them queens. So I need to watch them and I trade them. Now the knights. So knights are these. So think about this. They are always, people are trading this: Apple, Airbnb, AMD, Amazon, Baba, Baidu, Coin, CRM, FSLR, Google. And when I put them, so when they move, they are moving, or I can read them. So I can go as low as on the tick chart. So not all symbols you can read. In my opinion, you cannot read all symbols on the tick chart, but these you can read on the tick charts. So, or you can read as low as a 5 minutes. So sometimes the stock, they just don't show anything on the 5 minute chart, but these, they show their move on the 5 minute chart. So I can go as low as a 5 minute chart properly, and I read, and they have a narrow spread. The option is very good, and everything is like, these are the ones which I need to pay attention. So I call them knights. And then there are, I call them bishops. So I have another list of bishops like AKM, Crowd, Cyber, Datadog, Juniper, and all this. So just put a bishop. And then there are lower price stocks. So I call them pawns. So I just open during the day. I just open my list and see which one I can catch out of one by one. So I start with knights. I start with knight, then I go into queen, and then I'm looking at bishop, pawns, and these are the rooks. So ETFs, must pay attention to DIA, IWM, QQQ, SPY, and see which one is telling me what is going on in the market. So which one is telling me? So immediately when the market opens, I see gap up on QQQ. I say, okay, this one is a better signal, negating the yesterday's move. So based on watching this, I'm trying to decide whether I should add more to Baidu, or what else? Yeah, Baidu. So Baidu and others. So think about this. So categorize this. Then I need to have industrial groups. So industrial groups like airlines, biotech. So when they start move, like, okay, so another example I give you, my friend says, so think about all the things they ask. He asked me, okay, so what do you think about Pfizer? I think Pfizer is not moving and is about to move. I said, what do you think? Why you think Pfizer is about to move? He said, that's the only stock which is not moving. I said, well, it may not move for 10 years. It's like trading at, I think it's trading at 26. He said, no, it's trading at 28. So I said, okay, it's trading at 28. Maybe tomorrow it will trade at 24. Who knows? You want to buy something which is about to move, or you know that it is moving. Why are you buying something like a Pfizer? So think about this. So then he said, what do you think about Bank of America? So I asked him, have you gone to Bank of America branch lately? So he looked at me, he said, he smiled, he know what. I said, they close the door at 4 p.m. All the banks are closing at 5, but the Bank of America close at 4. They have two tellers. The other windows are, just they don't have a teller. So I just don't like Bank of America. So I'm not. So he said, no, it's cheap. It's 30, 35, $32 right now. So I said, okay, maybe you can, if you really want to buy financial, maybe find your entry in JPM. Maybe, have you seen JPM? Have you gone to JPM branch? Maybe you want to invest in JPM instead of Bank of America. Think about that. Then he started asking about the oil. So I gave him my opinion on oil and the retail stock. So anytime when something is moving, you open that sector and then you say, okay, which one I can catch? So think about that. Now the last part. So you see all that. You see, you know yourself. You know the market. You know the system. You know which symbols you're trading. So you have all the baskets. Now comes the symbol which appears. So you say, okay, this is the symbol. So 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 these are the time frames you must have, or I shouldn't use must, but pay attention. So these are the three categories of the time frame. So long term, so I call it long term. Daily time frame is a long term, weekly time frame, and the monthly time frame. So I have a one workspace where I can flip any symbol. I flip, I can see the monthly. I don't need for swing trading or position trading. I don't need to look at the monthly. It's too late. It's too heavy. Weekly, so start with weekly, daily, and then they have a 390 minutes. So then you say, okay, they have a 390 minute from 6:30 a.m. to 1 p.m. total 390. So if I divide 390, I come up with 2 bars equal size of 195 minutes. So then you say, okay, I will watch 195-minute time frame. And then you further the down, the if you divide 390, you come up the lowest time frame equally divisible comes to 13 minutes. So you say, okay, maybe I can watch 13 minutes to the lowest time frame. So from 13 minutes to 39 to the double is 78, and then 13 goes to 130, 10 bars of 13 minutes, and then 3 bars of what is 130, yeah. So 130, 130, 390. So 3 bars of date. So you can maybe you do that. And the nights, I said nights I can go as low as a tick chart. But most of the time, I'm just focusing on my entries and exits on a 5 minute. Spotting something on a daily time frame and then switching it, leaning on the weekly time frame. So spot something on a daily time frame, you lean on the weekly time frame to see what's going on in the weekly time frame, and then you immediately switch to short term or intermediate time frame and see which one is proper. So most of the time, the intermediate time frame is the proper time frame, because it's in the middle. So on the left side, so it's like, think about this just now. Think about this, uh, two mirrors, right mirror and the left mirror, and you're driving in this. So do you not pay attention to the right mirror and the left mirror, or do you just go keep driving on the straight? So these are your guiding. So on the right side, long term; on the left side, short term, and you're driving in the middle. So you see that so you see intermediate. So you need to have both sides. So most of the time, what I learned that I need to make sure that the intermediate time frame is in alignment, and the daily and weekly I can lean on to see if everything is okay, and then I time my entry in one of those time frames. So this is like driving a car. So when you put that, now I explain to you something which we do wrong, and I learn it, and so I try to explain to you. This is something called Ebbinghaus illusion. So I tell you about some illusion which I mean, in the market we have. So I'm trying to explain to you. So think about this orange bar, the orange circle. So this orange circle, and then look at this orange circle. So this orange circle and this, they are equal size. So it depends on a relative what else is going on surrounding. So if we put the orange circle surrounding with the bigger this, it looks smaller. When we put the same circle surrounding the smaller, it looks bigger. So what happened is illusion is although it's same. or it's supposed to be same. I have to tell my designer to make it equal. So just think this one and this one is equal size. So what happened when we spot something on a let's say we spot something on a moving something on a 5 minute time frame. So we see the spike, we see the volume, and we say, oh, this is a trade, I go in. But that trade may be not good because it's all illusion on a 5 minute chart. It's just you seeing some bars moving up, and then you paying attention to that 5 minute bar or 13 minute bar, and you forgot that on a daily time frame or on an intermediate time frame, if you plot this 5 minute is nothing. It's just a little blip, and then you're basing your entry just on you're getting this illusion of the volume bar or the price bar, and thinking that I need to go all in or enter in the trade. So is so 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 pay attention that you getting deceived by that move, because you're paying attention to the 5 minute bar, you're paying attention to the double top on a 5 minute or double bottom in the 5 minute. Pay attention to the total time frame. So relative. So it's 5 minute. You need to pay attention to what is doing on other time frame, how it's looking on other time frame. If you're just paying attention to the 5 minute, this one is looking like a big, and you are entering in that trade, and it's not meaningful. So think about this. So it's called Ebbinghaus illusion, and you can Google it to learn more. So now, so if we go further, and we're trying to make our focus narrow. So it's you here. You have a trading system, and you have a market, and you have a trading strategy. So your focus is getting narrow and narrow. So everything needs to fit. It needs to, that trade needs to fit you. It needs to fit that market. You have a trading system for that market, and you have a trading strategy for that symbol. So you have a laser focus. On top of that, this is a one level deep. So it's you here. This is the market uptrending. So this is John. This is uptrending market and quiet. And then he say, okay, this is the basket of his stocks. So he trade Apple, Baba, CRN, Tesla, Boeing, all that. So he has the symbols. And then he has a long system, uptrending quiet system. And then he has four strategies. Sometimes he buy shares, sometimes he buy options, sometimes vertical is pairs, sometimes he sells puts. So all that. So now, based on what is going on, his focus is very narrow. It's like right here. So if you are laser focused and have a concentration, you will make money compared to you going everywhere. You don't have a basket of trading symbols. You just open some scanner you bought from somewhere, and they're running the scan and everything, and then you're getting this illusion, and just going all in. You're buying a penny stock because penny stock is looking big move. Penny stock give you a big illusion. 35-cent stock is giving you big illusion. So don't do that. So laser focus, come to the market prepared. Once it comes prepared, you prepared and you're watching, then your job is to figure it out. If the big boys are in the market, you're not the only one in that market. If the big boys are not there, you are the only one, you will not make money. You need to know if you have a support of the big boys. So who are the big boys? They are the institutional players, hedge funds, sovereign funds, pension funds, high frequency traders. They have immense size and influence. They program trading going on. They have a complex trading strategies. So you need to know that there is something going on, and they are creating waves. You are not the little guy trying to create some ripple or some wave, something like that. So don't do that. Another thing is the price and volume filter. So put some price and volume filter, put some average true range filter, see the spike. So this is what I was trying to explain. You see the percentage in the price in last X minute. So during the 5 minute, you see certain move of 40, 50 cents. And when you put on the 5 minute chart, it looks big. And then you get illusion that this is moving. Or you get the illusion by that volume bar in spike in 5 minute or 3 minute or 2 minute or 1 minute, 500% volume spike. And then when you look at the time frame, it's 1 minute. So it looks big, but it's compared to the daily chart is nothing. So you're getting that illusion that something is happening and you're chasing that. So don't do that. There are other kinds of alerts. So I have all that. I get the alert, whereas opening range breakout. So I'll explain the concept of opening range and some other new intraday high, new intraday low, percentage up, all that you need to know. You need to understand the breakout above the support and resistance. So pay attention to the support and resistance, etc. So I'll do all that. Pay attention to the volume analysis, whether the volume is trending, climax, what is the absolute volume doing? If it's trading 1 million on average and it's trading 2 million already, so think about it. Why is trading 2 million already? Relative volume. At any given moment, what is the relative volume? So it trades 2 million during the first 2 hours, but it's trading 4 million during the first 2 hours. So what is going on? On average, during the first 2 hours, it trade 2 million. And first hour is already trading 4 million. So the relative volume is high. Something may be going on. So do you have that analysis to do that? So this is a slide for the trading system. So you can adopt one of them or you can combine. So I combine. So some of the system is listed here, the black box. You can buy some black box. You can master the chart pattern trading system and strategy. You can master the candlestick patterns, master band trading, trend trading, support resistance, breakout, breakdown, gap up, gap down, gap reversal, intraday, moving average. So these are the kinds of trading system and strategies and techniques you can master and combine it. So you cannot just trade one, you have to combine. So put 2 plus 2 together, make it 22. So the other day I asked my daughter, what is 2 plus 2? And she said 4. And then wrong is 5. And then she said, no, it's 22. So that's exactly 22. So you take trend trading strategy and then you combine it with the support. Maybe you have a volume analysis strategy. You combine the volume. So you are you have a market which is uptrending and quiet. And then you have a basket of stocks and you're applying this trend trading system to that basket of stocks, and then that market is moving and then you're waiting for it to pull back to some level which is a support, and then you combine it with the volume and you enter on that time frame, one of those time frames, and enter, and the target, etc. And you are not getting this illusion. So you're not chasing something and your focus is very narrow here. So do all that and bring it and trade. So last 3 slides about the belief, and then I will show you the metrics. There are metrics. I'll show you what the trader do during the market hours because of their beliefs, about their competency levels, about their skills. So see if you see that yourself in one of the boxes. Here's a checklist of some beliefs which we bring in the market. So some trader believes, I like to trade using fundamentals only. I like to trade with technical analysis. I like to trade with the trend. So you define the trend. For some traders, the trend is on the weekly basis. For some traders, they say, oh, I see the trend on a 5-minute chart. So maybe you can see it. I like to trade against the trend. Some traders are just going against the trend. They are always looking to short. I don't know. They're always looking to short. They're always looking for some clue that the market is about to tank. That's what they're always looking for, some assurance that the market is about to tank. Tell me when it's going to tank. I like to buy dips. So how you define dip? I mean, 3% below the high, recent high, 4%, 2%, 5%. What is your dip? And on what time frame you have a dip? Is it on a day time frame or is it on a 5-minute time frame dip? So you define the dip. I like to sell rally. Why you want to sell rally? Why you don't hold on? So this my friend, he said, okay, so do you get out when it goes when you hold a position 30 days? I said, why I would get out when I hit 30 days? Why not 31 days? So who's telling you 30 days? So then he's looking at my face. So you say, okay, I know 30 days. I don't know why you saying 30 days. Where you come up with the 30 days? I need to hold a position for 30 days and then I get out on 30 days, close the position because 30 days. I like to hold position as long as necessary. Maybe, you can hold forever. I like to hold position for a short time. Why only short time, 1 to 5 days? Why not 6 days, 7 days? Why? After 5 days, if the stock is going up crazy, you don't want to hold 6 days. I like to trade intraday only, closing out all position. Maybe you're a scalper or day trader. So if that is your belief and you have a system and that's you, maybe you can do that. So there are other beliefs. Fixed number of shares. Why you trade fixed number of shares? Do you trade fixed number of shares when you buy Amazon? You buy 1,000 shares of Amazon, and then when you buy a $5 stock, do you buy 1,000 shares of that $5 stock? To think about it, you something wrong here, because the exposure is not the same. So think about that trade idea definition. If you trading the fixed number of shares, the exposure level is different. 1,000 shares of Amazon is something else compared to 1,000 shares of a $5 stock. So if a $5 stock moves 100%, you will make 100%. $5, 1,000 shares, 5,000 become 10,000. So fine, but Amazon 1,000 shares, if it goes a little bit, you're losing 5,000 right away because it's 1,000 shares. So think about that. I like to trade a variable number of shares of contract. So this is my belief. I like to trade a variable number. So you need to calculate based on that equation, risk management, what is that variable number coming up. So it depends on your risk profile, on your portfolio size, and then where you will exit when you go wrong. So that is the variable number, and that variable number you need to be able to calculate right away when the trading is going on. I like to trade a small number of markets or stock, like 1 to 5. So Apple, Tesla, all that. So maybe you don't want to trade other stock. Diversified portfolio cycles. This is another one. I try to trade cycles. So when moon is aligned with the earth, or Jupiter is somewhere else and the Saturn is there, then I trade. Till then, I don't trade, and I can anticipate changes. So what changes they're anticipating? They're anticipating the market is about to crash. After Christmas, the next day, the market crash. So I will close out all my position and I will go, you know, short. So trading cycles. So this trader is bringing his own belief. I'd like to trade price patterns because I can react immediately. Maybe that trade oscillator. I like to read the opinion of others. So they go on the market and read the opinions of all the traders out there. Or I like to use only my own analysis of price action. So this trader says, no, I only trade my own analysis, even though his analysis is against the crowd and doesn't believe in the wisdom of crowd, because most of the time the crowd is right. So the wisdom of crowd, there is a wisdom, there is, something validity on the wisdom of the crowd. So if the crowd is, you're going against the crowd, maybe you don't want to trade. Maybe you say, no, 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 the crowd, I have an edge over the crowd. I will not take that trade, or I will exit the trade because I have my edge. So maybe if you are over the long run, if you're saying that I have an edge over the crowd and I'm right, market the trader the crowd doesn't know that you will make a lot of money. So all that beliefs you bring, and then you develop the system. So think about it, all that, and you believe, and you bring the system. Now, how would you react in that system? So I'm showing you this matrix. So there are so this one. So I'll explain to you what is here, and then think about whether you fall into one of these categories. So the way this chart is defined is belief in trading system. So you develop your system or your skills. So you develop it based on your belief. So you have certain beliefs and you develop it, and you develop that system for that for the market. So you're trading it in a given market. So how you react, so it depends on your belief and whether you borrowed the system or you're just starting out. So what is going on with you? So think about this. So here the belief is either low, medium, or high. So either you have a high belief in your trading system or you have a low belief in that trading system, meaning you just started or you borrowed from someone, or you have a medium belief. So think about this. If you have let's say start from here. If you have a low belief in the system, low belief, so you just started it and you don't know how it works, and the market is really good, favorable, and even though you have a low belief and the market condition is favorable, you become overconfident. Even though you have a low belief in system, because the market condition is favorable. So you go into this box. So there are 9 boxes here. So you become overconfident and you start to trade beyond your exposure level. So think about it, beyond your exposure level, even though you have a low belief system, because the market conditions is favorable, so you become overconfident, you just go all in, and you are in a hurry to make money. So overconfident. Now, when the market become difficult, because you have a low belief system, market become difficult, you start to ignore signals. So market is saying to go get out, but you are not getting out. Market conditions is getting difficult, and you have a low belief in system. Market is, that system is telling you to get out, but you ignore it. Now, when the market condition become challenging, like one day it goes up, one day it goes down, because you have a low belief in the system, you just abandon that whole system. You just say, okay, I I let it go. This one sucks. I go buy another indicator. So you go and look for another indicator. There's nothing wrong with that system. It's just that the market conditions became challenging. So it doesn't fit the so you would, and maybe you don't have a skill to handle that market. So because the belief in the system comes with the use of that system. So you need to spend some time to create some belief at a higher level. So on the other hand, if the belief in the system is high, so you've been using it, you believe in it, you have seen all the cycle, when the market condition is favorable, you're very relaxed because you see it, so you relax. So if let's say this, you don't see anything to trade, so you still relax. And even if some positions are going the other way, you are still relaxed because you believe in your system. When the market conditions difficult, you are still confident that it's okay. I believe in it. The market conditions is difficult. I'm confident that I will be fine. And when the market becomes challenging, you stay patient. So you're not forcing anything. So think about this: from abandoning the system, you adopt a mental state of patience by having a high belief in the system. And how you get the high belief? So high belief in the trading system, when you have a useful belief in that system or your own belief about the market. If you have a garbage belief, you create a garbage trading system. So your belief, market tanks after Christmas next day, or just buy something, a marijuana stock, then a blockchain stock, then an AI stock. Give me something about some AI stock. Give me something to buy. So don't do that. So in belief, you have to ask yourself, am I bringing a proper belief? Is it useful? Is it garbage? If it's useful, why I'm not using it? Why I'm not capitalizing it? Is it garbage? Why I'm not dumping that belief? Who gave me that belief? Where did I get that belief from? How can I get rid of it? Maybe you have certain emotions attached to that belief, and you cannot get rid of that belief because there is emotions attached to it. So how you get rid of that garbage belief? First, you need to get rid of the emotions attached to that belief. Once you get rid of that emotion, so now there's a big, so getting rid of the emotion, etc. We all have to do. You have to be strong in meditation and seek help. Whatever, you can go online and do some exercise on getting rid of that emotion. Once you get rid of that emotion, then the belief attached to it, you will be able to dump. So this is the matrix we need to be in. If we are not, very hard to succeed. And then the medium size is when we have a medium belief in system. When even when the market condition is favorable, we are tense for no reason. So we are tense, and then when it become difficult, we become skeptical that am I using the proper system, because you're better than the low, but you're still skeptical. And then when the market conditions become challenging, you go and start tweaking the system. So you say, okay, no, not 20-day moving average. Maybe it's a 20-day move, 21-day moving average. Maybe it's not a simple. Maybe it's exponential. Maybe I'm looking at the wrong time frame. Maybe not 195. Maybe I need to look at the 13-minute or daily or weekly. So you go just do all kinds of tweaking and modifying, and it's not going to work, because what happened, the market conditions have changed. So understand the market conditions have changed. You need to stay in the same metrics. So think about that. Now, so same, I'm explaining same. Now, this one, uh, your skill level, difficulty level, and the skill level. So if your skill level from low, medium, and high. So if your skill level, if you rate your skill at the low, medium, and high, and the market trading level is low, medium, and high, then what happened to your mental state? So each one of us go into this mental state, and which one is the right one? So if your skill level is low and you're having a very difficulty in the market because of the market condition, you're having some apathy, worry, anxiety. So think about this. You're going through this apathy, worry, anxiety. If your skill level is medium, you boredom, concern, arousal. So I did some research on arousal. So I mean, I said, what is this? So there is, so there's this, you can do some research. Now, the best one, so I have an example during my degree. So I'll explain some other time. So this one, arousal, a skill level high. When you have a high level of skill, when the difficulty level is low, so market is moving nicely, you relax. And when it's medium, you are in control. You say, okay, I'm in control of my portfolio. And even when the market difficulty level is high, skill level, you're going with the flow. So think about it. We need to be in this quadrant, one of these quadrants. So we are not. We are somewhere here. We worry, we anxiety. We talk about abandoning the system. We talk about ignoring the signal. We are overconfident. So we're doing all the things which we are not supposed to do. Now let's go to another matrix, which is trader's competence. So now, so we talk about the belief, we talk about the skill, now about the competence. So, and again, the market conditions. If our competency level is low, when the market condition is favorable, we become optimistic. So you see, we become optimistic and we become pessimistic. So we become optimistic and pessimistic. When the market condition change to difficult, we become confused. So because we market was favorable and we were making money, and then our skill level is low, we become confused. And then when the market condition become challenging, we become fearful. So we start dumping and doing all kinds of things. So we adopt this mental state of fearful. On the other side, if our competence is high, when the market condition is favorable, we are relaxed, we are focused. So remember that I gave you the example, focus. So we are focused. And when the market condition is challenging, we are still confident that this we can handle this challenging situation. So from fearful, you go into confidence. From confused, you go to focus. From optimistic, you become relaxed. How? Because you increase your competency. So you increase your competency, you increase your skill level, you bring the proper belief in the market, and then you have a proper mental state and you're executing the mental strategies. You have a proper time frame. You have done the research on the symbols you will trade, the kind of market you're looking for, who you are. So who you are, the kind of market you will trade, the trading system you have, the symbols you have, the strategies you have, you're developing your skills, you're competent, and you have a proper belief. So putting all this together, that's where the success comes. And then if you have a Robinhood on your phone and you're just trading it, not going to work. So so if we put this matrix, what happened? Uh, so this is when the market conditions. So when the market conditions, we stop trading challenging. When we have a low belief in system, we just stop trading. We stop ignoring we ignore the signal. We become overconfident because they're favorable. On the other hand, when we have a high belief, we are relaxed, confident, and patient. So this is the kind of a quadrant we have instead of uh, modifying the system or abandoning the system. So if you start to modify something which was working, so think about this. You say, okay, for last 7 8 weeks it worked, and suddenly it stopped working. So what is going on? Did I change? Maybe you change. Something happened to your life. Maybe your wife ran away with your kids, and so you say, okay, my wife ran away with my kids. Now what to do? I cannot find her. So it's nothing changed. It's just that you change. something happened, or someone passed away in your family. So something you become cuckoo, loco. So something happens. People do go mental. They lose, or they go catch the COVID. So when the COVID comes, I got the COVID, you know. So think about this. Not only one time, two time. So nothing happened. It's just that I got the COVID. And during COVID, I was trading from the bed. Literally, my laptop was on the bed and I was trading from the bed. But think about it, COVID. And during the COVID, if I start modifying the system or burning system, there's nothing wrong with the system or nothing wrong with the market. Is wrong with me because I got the COVID. So think about it. If something is going on with you, you need to step back from your trading. Now, final is swing trading. So we have a swing trading system. So what is swing, if you ask? It's a speculative trading strategy. You trade active market. So I explained to you the symbols, trade liquid market and trade market in the news. So the market is always in they are always getting some kind of a news. So they are active. So swing is in between the investing and long term and the day trading. So it's a in between concept. So slower pace of investing and quicker pace of day trading. So it's in between. So you're timing your entry based on your skills, and then you're exiting it based on some targets you have identified. So the objective is to maximize profit in short period of time, minimizing the downside risk. So the uniqueness of swing trading. So think about this. The system you develop for your swing trading, the profitable trade comes before the crowd notices. So before the crowd, um, like retail guys or the other people are coming in and joining in, you notice it way early, and now you see other people. So you initiate your trade, and then the others are joining in. So you're scaling in, and you are maybe piling up in that trade. Fortune is made by a singles, not home run. So you're not looking for home run, you're looking for singles. Home run once in a while take care of the losing trade, and your equity curve should rise. The reason the equity curve not rise in a proper way, because we go all in few trades. That's one of the biggest drawback. We go all in few trades, and when the few trade go south, we don't have a buying power. Now we want that trade to come up. So our equity curve is just like a volatile up and down. It's not. So if you want to reduce the volatility in your equity curve, spread your trade. You can cut down all the loser, little loser, and then you scale in on the big win, and then you're getting out. So if you're targeting 3 to 7% in a stock, when you translate this in option, it becomes 40 to 100%. So how you execute, so anticipate the next move to get head start, understand the price reaction. So you have to understand price. You have to analyze the volume, both absolute and relative. You have to understand the buying and selling pressure. You have to understand the support and resistance level clearly, because support and resistance levels are the demand and supply zone. So if you understand support and resistance, you're understanding demand and you're understanding supply. Just like any other market, there's a demand and people pay the price. If there's no demand, people don't pay. You're willing to buy something where there's a demand. You know there is a demand and I want to buy. You sell when there is a resistance level, a selling pressure. And you must understand all the major turning points. So how you understand the major turning point? You look at that window, the two mirror, right side and the left side. You go full landscape and then evaluate all the major turning points, and you draw the line. And when you get the alert, you know what's happening, and your targets are set based on these major turning points. So for swing trading, you have all those systems, but you really don't need the perfect indicator, because the perfect indicator will be when the trade is about to end. That's where you have a perfect indicator lining up. So you trade the system fitting your trading style. So I have my own trading style. You will have your own trading style. So develop something which is your own trading style. So in my email, the invitation, so I said 20,000 hours. So think about this. People are not willing to put in the hours. So anything you need to master, the expert says, I'm not saying you need 10,000 hours. So there are 252 trading days in the year, and there are 6.5 hours. So just say 6 hours. So 252 trading days. If you trade every day, and for 6 hours you are, so 252 multiplied by 6, so whatever the number comes, and then take the 10,000 hours, divide that, you will come the number of years. That number of years or time or hours it takes to master something. And in order to be very creative, like creativity, the creativity comes with 20,000 hours. So people say, oh my God, 20,000 hours, 10,000 hours. So maybe some people don't have the time, so I understand. So it depends how passionate you are. So identify a proven pattern, execute same techniques daily, use your expertise, judgment, and skill. So this comes with the time. Flexible, you have to be flexible. Sometimes the target is 110, the target is 105. So if you have a target of 110 and it's not going 110, you need to exit at 105. You have to be able to understand the broader markets, all the indices, what's going on from day to day. And so only then you stack odds of success in your favor. So we do that. We provide the real trades real time. I don't send you trade on Sunday night and say, okay, this trade, you just say buy it on Monday. I don't know Sunday night what will happen on Monday morning. So we provide email and telegram. We specify specific buy price. We give you three targets and stops. I do the fundamental and technical analysis, blog posts on Trade Genie, daily lessons and quizzes. So I have developed so many quizzes and lessons. I send you, it's up to you to take, read those lessons and attempt those quizzes. I teach you like this. There are 9,000 traders on my Facebook page and YouTube, 30,000 Facebook fan, and I provide you the guidebook and full support. I have a team to back you and help you. So there's no shortage. And the price for the swing trading, I'm just mentioning it, is 1897 per year. So in case you're interested for the whole year, 1897, you contact my team, Success at Trading. Somebody will help you. The team is always available 24 hours, 365 days. There's somebody working. Even on Christmas Eve, somebody will be working. And on Christmas Day, somebody will be working. So I have set up the team like that. 365 days, 24 hours. So that's the conclusion of today's session, which is developing your profitable trading system. I hope you take this and whatever you're doing, laser focus. So see how can you laser focus on whatever you're doing, laser focus, and you will succeed. I'm 100% sure. So thank you for coming.